Hey, what's happening, guys? It's Dan Darrow here with another Options and Play video update. So, crazy start to the year, huh? Figured January is going to be busy. Typically is, and this January has been no different. Another day today, another new high, and it kind of if you take a look out of it, if you take a look at the spiders, the Qs, the Dow from an overall perspective, you say more of the same from October, November, December, just a really strong trend. Obviously, if you follow a little bit closer, you know that there's quite a bit more going on underneath the surface, and it hasn't been as clean and maybe as easy of a hold as you would have anticipated based off the overall action, right? So we talked about this on Monday during the option session, and it's just like a good thing to kind of reiterate as we keep going higher and higher and higher, and people start to get a little bit more nervous, especially with the increased headline risk, right? It's that options, they're a great they provide all sorts of utility, right? So some people use them, for just trading, for taking positions on swings, maybe sitting in longer term positions, maybe trading events, right? Well-defined risk into big volatile events like earnings or bios, but they're also useful for hedges, right? So we've talked about it a bunch, how we like to put on hedges and like the spiders and the Qs, UVXY calls, right? So these hedges, it can be frustrating when you keep going up and up and up, and spiders for the most part really haven't broken that 8 EMA, and they still look like they should keep going up and up and up, right? I mean, like that 8 EMA is the line in the sand for momentum. You could maybe argue that the 20-day is probably like the level you want to focus on. If we lose that, then the downside could really accelerate. But right now, 8 EMA is holding. We just keep going up and up and up. So you want to participate in that, right? There's some great action, but at the same time, you got to acknowledge that. I mean, 2 days ago we were down 600 points in the after hours off of a rocket attack headline, and there's real risk there. So the option hedges, right? So I like minimum 2 months, maybe like a little bit more, a little bit less, but 2 months is kind of like the sweet spot for the hedge. And once it gets under like the month time frame, then thinking maybe roll it out. So right now you're thinking maybe like March, February. February might work. March probably a little bit better, right? And you're looking basically for I like to do like retracements down to like the previous high, right? So that would be like right around like 315, right? So typically when we roll over, we kind of roll over and retest like the high maybe from like a previous move. So I'd be looking for like 315. Also kind of lines up with the 50-day, right? So I'm looking at some sort of like spiders, maybe like February 21st expiration, March 20th expiration. So 1 to 2, 1.5 to maybe 2.5 months out. Um, and for a move back down into like the mid teens, right? To like back test like this 315 before we had like that breakout. Qs, kind of similar. They're even more extended, but again, you're probably looking at something like 205 to back test that November, early December resistance range. And again, like 1.5, 2 months, 2.5 months out. That's kind of like the time frame I like for like those hedges, and like really like the rationale is that like I don't necessarily want to time it exactly. I just want to have some sort of downside protection in place, right? Because you don't always know when the headline's going to hit, when the sell-off is going to start, and it's just nice to have some sort of protection in place in case you wake up one day and all of a sudden we're down 2 or 3%, right? Uh, so that's why I like talking about it, and I think it's important to go over it again right now because, you know, you don't want to miss out on like this crazy move in the market, but at the same time, the higher we go, the further we go, the faster we go, it increases the likelihood that we could get a pullback, right? Especially with all of this increased headline risk. So things to take note of. And again, options, just a great way to do that because you can manage your risk. You know exactly what you're paying, right? The options, what the price you pay is the risk you have. So they're just a great way to kind of like manage the downside risk. And I think it's worth a look. All right. So if you have questions or comments, I'd love to hear from you. If you're looking for more information on options education or more information on option trade ideas, please follow up with the link in the description of the video for more information on options to play. All right. Hope you guys have a fantastic night, and I will talk to you all tomorrow.